Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, I'm sure many of you are seeing the reversal that's happening on the Bitcoin chart right now. Bitcoin is back over $105,000. So over the past 4 weeks or so, I've been sharing with you guys the chart of Bitcoin being in the overbought zone, and we are headed to the oversold, and we went down and touched the zone, which I think is near the bottom, which is 98K. I've said that many times in my newsletter as well as on the podcast. But I want to be cautiously optimistic here because we've seen the markets fake us out. It doesn't mean the bull market's over. We're talking about the micro here. In the macro, we are heading to new highs, but the path to that is going to be volatile, right? You got to expect volatility in this market. So don't be surprised if Bitcoin rolls over again to test the 98K or goes to 96K. Just something to keep in mind. I'm not saying it's guaranteed. I'm not saying it's absolutely going to happen. It's just that as educated, informed investors, we want to be prepared for all cycles and we don't want to get faked out. We want to look at the data and look at what the charts are showing us. So Bitcoin, its RSI bottomed out around 37 or so, but it could go down and that RSI could touch the 30 level or even below. We've seen this time and time again. It just depends on how things play out, and we'll just have to be patient. But we're also seeing moves from the stock market as well, specifically the S&P 500. So as I've been saying, global liquidity is the leader here, showing us the path where all assets are going to go to, because as the central banks and governments around the world continue to inject liquidity by debasing their currency, printing more money, asset prices are going to follow. So you're seeing gold, silver, crypto, stocks, real estate, all hitting new highs, right? And they do have their turns. There's kind of a cycling of the liquidity, so they don't all pump at the same time. But if you just zoom out on the chart, you see all these assets are moving. And of course, it's all driven by global liquidity. Now, if you go to the micro, there's demand for certain stocks. There's demand for certain real estate in certain regions. There's demand for certain cryptos. But the overall rising tide is that global liquidity that is taking the prices to new highs. So this is where you have to be patient and go through the cycles because it is volatile, whether you're in the stock market or crypto. And look, I know crypto is more volatile, of course. Specifically for the stock market, S&P 500 confirms hidden bullish divergence on the daily. So you're seeing the bounces across the board here, and even certain altcoins started bouncing like Ethereum, XRP, and others. So that's a good sign. But like I said, just be prepared for a retest of some of these lows. And it's not going to be an extended thing. It could be something quick. And then the market finds its actual bottom and starts moving. Or, like I said, this is maybe the bottom and we're moving up. So just remember what I'm telling you here so that you can control your emotions and understand the path forward. Now, here's some very bullish news coming out of the Federal Reserve. So here's the headline. Federal Reserve officially ends reputational risk oversight, easing crypto banking restrictions. So we're seeing easing from the OCC, the Fed, the FDIC. Everything is being opened up here for crypto because this asset class and technology is here to stay, and the banks are ready to participate because we see that legislation's on the cusp of being passed, stablecoin legislation as well as market structure. So the banks, many of them have already signaled they're ready to launch their own stablecoins. We recently reported on JP Morgan launching their deposit token. Bank of America confirmed just about a couple of weeks ago that they are ready to launch their stablecoins, and even all the major banks, Bank of America, JP Morgan, Wells Fargo, are looking to work on a joint stablecoin, which I think has the vibes of a CBDC. So you got to watch out for that. So guys, things are opening up very beautifully here for crypto. It's going to allow more capital to come into the asset class, more adoption and much more, which will lead to higher prices. So this is great news. And on the legislation front, Eleanor Terrett is reporting that the banking GOP is aiming to put out principles, aka an overview of core ideas/values for its market structure bill at some point either later today or tomorrow, ahead of tomorrow's subcommittee hearing on the matter. So now that we're seeing stablecoin legislation has been wrapped up in the Senate and it's moving to the House, we're seeing the Senate is now starting to focus on market structure. So many of you know President Trump gave the mandate that he wants the bills on his desk by the August recess to sign them into law. So the sooner Congress can get this done, the faster these things can become law. And that will open up a ton of capital to come into the asset class, a lot of building and innovation, and will all lead to higher prices. Now, moving ahead, Anthony Pompliano, he's in the news here. So Anthony Pompliano is getting involved in a company that's going to have a Bitcoin treasury strategy, and it's a big one. So here's the headline. Anthony Pompliano's ProCap to go public in a $1 billion Bitcoin treasury SPAC deal. So many of you may have heard of SPACs and how companies can use those to go public and much more. And this is a big one by Pomp. I mean, $1 billion. So pretty incredible. So ProCap raised $550 million in preferred equity and secured $225 million in convertible notes. Now, Michael Saylor put the blueprint out there for this, right? But these companies are now looking to go buy up or buy a bunch of shares from a company that's already public. And this allows their respective company to go public and, of course, do the whole stock arbitrage with buying Bitcoin and raising debt and all that stuff. So the transaction announced Monday positions the new entity, ProCap Financial Incorporated, as one of the largest Bitcoin treasuries ever to hit public markets. So the company plans to generate profit not just by holding Bitcoin, but by actively deploying its Bitcoin balance sheet across yield-generating strategies that mitigate risk and capitalize on crypto financial infrastructure. The legacy financial system is being disrupted by Bitcoin, Pompliano said in a statement. ProCap Financial represents our solution to increasing demand for Bitcoin native financial services among sophisticated investors. So, folks, this trend, as I've been saying for a long time, over a year now, with Saylor and what he's doing and then other companies entering in, this trend is not ending and it's going to go beyond Bitcoin to altcoins. And we're starting to see a bit of that. We've had news around Solana, Ethereum, and XRP as Treasury reserve assets. Now, what's appealing about your Solanas and your Ethereums is the staking component. So you have that built-in yield feature, if you want to call it that, but you don't necessarily need that, but it is a great attribute. XRP and Bitcoin have to find DeFi ways of earning that yield. So it's incredible. I mean, $1 billion. That's to buy Bitcoin. That's pretty incredible. And speaking of the Treasury Reserve Asset strategy, a semiconductor firm, Sequans, to raise $384 million for their Bitcoin treasury. So roughly 240 companies now hold Bitcoin in their treasuries, nearly doubling from 124 just weeks ago. Combined, they control around 4% of the total Bitcoin supply. So we're seeing adoption on many fronts here, and it's happening globally. Folks, quick word from our sponsor, and that is VeChain. VeChain is one of the top layer one blockchains out there. They're getting adoption by many enterprises, big companies, and more who are using VeChain to build Web3 technology and sustainability technology. I've been a VET token holder for many years, since 2018, and I'm very bullish on this project. Some of the key features of the VeChain blockchain includes a secure, affordable, scalable, fast, and sustainable. Some of the brands that are using VeChain include Givenchy, PwC, Walmart, China, BMW, Boston Consulting Group, and many others. They are even partnered with Dana White and the UFC. Many of you may have seen that partnership, and they're doing some great things. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Now, folks, look at this news. Crypto hedge fund executives to raise $100 million for BNB treasury vehicle. This is so interesting. So according to Bloomberg, former executives at Coral Capital Holdings want to create a BNB treasury company. So as I was saying earlier, they're going to go beyond Bitcoin, and now BNB is entering the game. Now, this is actually surprising because BNB is a exchange coin. It's the native coin of the Binance exchange. So very fascinating. But look, if all these assets are going to move with global liquidity and they're in the top 10, so they're getting exposure, they're very liquid, they're going to do well. They're going to make returns. And if these guys play their cards well and they do the arbitrage with raising their debt and with their stocks, it could work out. Now, what we have to watch out for, this could lead to some sort of bubble because not everyone's going to be a winner. I'm sure not everybody's going to be doing this the right way. It comes down to the team, how they manage this. So this could be something that takes us into a bear market with some collapses. I'm not saying all these companies are going to collapse and there's going to be some massive collapse of everything. Of course not, right? But some will. I mean, history has taught us this in markets. So let's see how this all plays out. That's why you want to have a profit-taking plan near the top of this market to walk away from the bull market with money, because bear markets do return. So if anyone's telling you there's never going to be a bear market ever again, they are lying to you. History is not on their side. And we see that the crypto market, stocks, and all these things, real estate, it's all correlated to global liquidity. And if there's a downturn in liquidity and the Fed has to raise rates and, we go through another tightening cycle, of course, we're going to see a bear market, right? That's the nature of how the economy and the markets work. Now, Anchorage Digital, which is a crypto custody firm, they have added DeFi capability for institutions with Uniswap wallet integration. So we continue to see the infrastructure being set up for institutional investors, not just retail. I think for the most part, retail has all these things, but for institutions, the big money. So this should be a clear indication, folks. There's demand, there's more money to come into this market. And as I said earlier, with crypto legislation, once that gets passed, a lot of capital that's been sitting on the sidelines are going to jump in, because there's no longer a risk. It's a market that's regulated and protected, and the governments are putting in the guardrails and much more. So Nathan McCauley, who I've had on the podcast a few times, he's the CEO and co-founder of Anchorage Digital, build the integration as enabling institutions in DeFi to move at crypto native speed without compromising security. So among the company's portal wallets clients are Maple Finance, Sui Foundation, and decentralized exchange DYDX. Other companies that have rolled out institutional wallets or platforms include Blockdaemon, Fireblocks, Consensus, and Fortify. So folks, the on and off ramps being built here for more capital to come in. Now, we were talking about, altcoin treasury strategies and much more. And DeFi Development Corporation, I actually interviewed the CEO last week, and I'll be publishing that interview this week. They're using a Solana treasury strategy. But look at this. Their stock is going on chain via Kraken exchange. So they're going to tokenize their stock. So the company's CEO described its stock tokenization as a DeFi Lego block, suggesting it serves as a foundational piece for decentralized finance adoption. So, we've been talking ad nauseum on this podcast about stocks and equities and the traditional assets going on blockchain, and it's going to create truly global markets 24/7, 365 days a year. No more opening and closing bell. For years we've talked about that, and it's coming to fruition. So it's pretty amazing to see that these things are going on chain, and it's just going to open up a lot of new opportunities and investment products, and it's pretty incredible. So let me give you some details here. So DeFi Development Corporation, a Solana treasury company formerly known as Janover, announced plans to tokenize its shares through a partnership with crypto exchange Kraken. According to a Monday announcement, the company will use X Stocks, a tokenization platform created by Bakkt, to bring its shares on chain. Kraken announced a partnership with X Stocks in May, promising to offer investors tokenized shares of US listed companies such as Apple, Tesla, Nvidia to users in other regions. The platform is built on the Solana blockchain. Incredible stuff happening, folks. And this is where you, as an investor, you can hold a stock for DeFi Development Corp. You can also hold the token of the Solana blockchain, right? Holding the token of the blockchains that are being used as the rails. That is where you have the opportunity to take the bet, unlike previous asset classes and technology, where hedge funds and many folks have gotten ahead of time. You can participate freely and buy a fraction. You don't have to go put a minimum of $100,000 or anything. You can buy literally $100 of the Solana token, $100 of XRP, ETH, Bitcoin, and so forth. So that's the game-changing aspect of this asset class. Now, final news item: Cypher Mining begins Bitcoin production at 300 megawatts Black Pearl data center. So we're seeing miners are starting to ramp up, because we're headed, I believe, to the top of the market. So they're going to look to grab as much Bitcoin, and of course, they sell their Bitcoin, and they're going to get transaction fees and much more. So, Cypher Mining has started Bitcoin production at its 300 megawatt Black Pearl facility in Texas, marking a significant milestone for the company. Phase one of the Black Pearl site is operating at 150 megawatts with an initial hash rate of 2.5 exahashes per second, expected to increase to 9.6 exahashes by the end of the third quarter. Cypher Mining aims to maintain low production costs and scale as quickly as competition intensifies in post-halving markets. So the race is on, and they wouldn't be doing this if the bull market wasn't still a thing, right? If Bitcoin wasn't still going to be going up, because these miners, they have to be profitable. And if they see a surge in demands coming, the price rising, they're going to get more fees, more buyers. So they're going to ramp up here. So expect to see the hash rate for Bitcoin increase significantly. And that's very bullish, folks. So remember, have your profit taking plan, even if you don't hold Bitcoin. But we know Bitcoin leads the market. So we're going to use it as a measuring stick to get an idea where we're at. And while no one can call the exact top, we want to look for the top zone. And that could be, over a 3-month period. We can say, hey, look, signals are flashing that this thing is nearing the top. So you want to start taking your profits. And like I said, we want to walk away from this bull market with money in our pockets. I've often shared my strategy. The profits that I take, I will be using to pay off debt, add to my retirement, spend a little, of course, and then take some of that and reinvest it in a bloody bear market. So as we start heading into a bear market and the prices go down, and look, they may not go down to 70 to 80% like we've seen in the previous markets because you have ETFs and much more, but maybe it goes down by 50%, right? Or 60. So not as deep, or maybe less. Maybe it goes to 40. I don't know. We'll just have to wait and see. We don't have a crystal ball, but nevertheless, want to take profits off the table and then rinse and repeat. Relative to other asset classes, this is still very early. So there's still juice to be squeezed out of this orange, if you know what I mean. And with legislation in place, you're going to see a lot of building. So there's going to be a lot of new stuff coming by the time the next bull market arises, right? You have each cycle has its own narrative. You've seen ICOs, NFTs, AI, memes, and I'm not a fan of memes, but you could see a big boom in deepen and tokenization, even further tokenization as we head into the next bull market, which is around the next halving of 2028. So let's see how this all plays out, my friends. The important thing is, like I said, we walk away from this bull market with money in our pockets. Folks, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Now, folks, a great way you can support me and the podcast is by subscribing to my free email newsletter on Substack. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you every aspect of crypto. Knowledge is power. This course will teach you everything you need to know. It's packed with tons of value. Links will be in the description. Thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.